So what we have on the chart right now is we have Thursday's high and low marked out. So it's nothing crazy coming into a day like today. I don't hold a big opinion coming into today like non-farm payroll. Non-farm payroll is one of those news events where it can just boom go to either side of the range without any real reasoning, especially whenever you have a non-farm payroll that's about to release, where it's sort of within the middle of the range, as you can see right here. So, and yes, we'll get that sorted in a minute for the people in chat. So for non-farm payroll, I don't hold a big opinion. I'm not trying to trade ahead of non-farm payroll. I'm not trying to predict non-farm payroll. But these 2 points of liquidity right here, would be Thursday's high and low, these are the biggest pools of liquidity that non-farm payroll is likely to draw towards, or upon the release, just expand to. So, with where we're at, we go to the 15-minute time frame. There we go. We can see that we do have a weekly cycle sequential SMT with the Dow. So if non-farm payroll, if I had to guess where non-farm payroll would likely deliver, I would say to the downside to these lows right here. Now, am I confident enough to try to trade ahead of this or predict this or put an entry on right before the release? Absolutely not. You never want to trade like right before one of those big news drivers, which we might see why today whenever it releases. Because there's a characteristic that these huge news drivers have, and if you get in right beforehand, you will end up getting smoked. And for the stream, I'm going to end it and start it up real quick so the people can get in. I swear this stuff only happens. Why is this on my chart now? Oh, it's gone. Okay. So yeah, right now with where we're trading at, and everybody should be good. We have one person streaming the stream and then get another person right now. We have 1 minute till NFP release. don't know if TradingView is lagging, but as soon as NFP releases, they freeze my charts. Crazy. See, it's delivered to the upside. So, non-farm payroll generally has two characteristics. Number one, it will expand upon the release and then continue in that direction. Or two, it'll expand in a direction or kind of take out both sides of the market and just consolidate for the rest of the day or consolidate for the rest of the morning session. Is the audio good? Yeah, if you're in my stream and you hear the other two streams going on, just mute them. Or else it will echo. And then vice versa. If you're in one of the streams and then not the other, then just mute the other one. So you have nothing to do until one side of the liquidity is taken. Is that fair to say? Yes. Exactly. So whenever you're trading non-farm payroll, which you shouldn't be trying to trade ahead of this move right here. And I don't know why my chart keeps on turning orange and blue. But until non-farm payroll delivers to the biggest pools of liquidity, it is likely difficult to navigate. Now, that's not to say we can't see something that might form a little bit later on, but right at that news event, you never want to try to trade ahead of it, like at 8:25. More times than not, you will get smoked. Yes, we do have a daily cycle sequential SMT right here, but and here's a case study with SMTs that form like this. This isn't enough for me to trust it, due to the fact that this news event can skew precision and the time that this SMT formed, being it formed right at the release of non-farm payroll. For right now, if something confirms this, then yes. But for right now, this is not something I would just hop in a trade just because it's there. So we'll just keep a mental note of that for now. I don't know why my trading view is so laggy today. Characteristics of NFP making your trading view lag. when you consider changing time frames from 15 minutes to 5 minutes to 1 minute. So generally, until around 9 o'clock, from 8:30 to 9, that's when I'll generally stay on the 15-minute chart, because everything we're observing right now is higher time frame. But once the 9 o'clock rolls around, that's when we can go to those lower time frames and try to find something. So a big reason why you don't want to try to trade ahead of these large news events, and it didn't form today, but more times than not, things will happen to where price will create a very large wick, and this is getting annoying with the orange stuff showing up my chart every second, but the news driver will create a very large wick right at the release, right at the release, that's very quick to one side and then completely reverse, taking out the other side. So let's say if you were in a buy right here and the market wicked all the way down below this low and then created the run higher, then you would have gotten stopped out. And more than getting stopped out, since at this time the volatility is so high and there's so much spread, if you were in a position and let's say you had your stop at this low and then price, boom, drop below real quick below this low and even a little bit lower, your stop order isn't going to get filled right here at this exact price point due to the volatility. It'll get filled more so around here. So that 1% risk that you have in reality can turn into 1.5% or even worse at 2%. So that's why you never want to trade ahead of these events, just because you can 100% be right. But if you get in a position directly before the news event releases, there's a good chance that the market will wick you out, and due to slippage, you'll take a bigger loss than what you even intended on taking, even though you got it right. So that's very important to keep in mind of. If you were to trade a news driver like this, the best time to get in is either the day before or 2 days before. So now in the meantime, within the next 15 minutes until 9 o'clock hits and we can drop down to that lower time frame, we can talk about whatever you guys wish to speak about. And somebody said for the characteristics of non-farm payroll, expand and release and continue in that direction, or take out both sides of the market and consolidate the rest of the morning, yes. Those are the two characteristics. And very rarely will you see non-farm payroll deliver something like this, where it expands in one direction and then consolidates and then completely reverses. That is a profile, but it rarely happens. The main two are going to be what I stated. Forex just created a weekly cycle for both sides. Yes, it's low probability. So I'm not too interested in Forex right now. But as you all know, since right here we wanted to see this bearish delivery. So anybody that got a nice portion of this range, you guys are good. Target on the dollar already got met. But I still would like to see this low get delivered on euro. Somebody's asking about the 4-hour TPD. TradingView won't even let me get to the 4-hour time frame right now. They're making us wait. There we go. So right now there is no 4-hour TPD. And you wouldn't use this right here. You do not want to use the 10 o'clock. Only the 2 o'clock. The 2 o'clock one is the highest probability one. For the 4-hour time frame. Before dropping to the lower time frames, what do you take into account from the higher time frames to use as guidance? Number one, having a sustained higher time frame draw on liquidity, and then framing cracks and correlations within the New York session in that direction. And on a day like today, because you guys saw me do that for our past 3 live streams, you saw me go from the higher time frame, mark out higher time frame points of interest, and then work all the way down to lower time frame, all the way down to a 1-minute chart, trading in that direction. On a day like today, that will be extremely difficult to do because, like I said, non-farm payroll, as soon as it releases at 8:30, can boom, just change everything. Before this released, I said gun to my head, I would like to see it deliver lower. And as you can see, it completely disregarded that analysis. We won't talk too much about TPD in here. Right now we're just waiting for the 9 o'clock hour to roll around. Can we mix match sequential SMT? For example, bearish weekly cycle with SMP and bearish daily cycle with the Dow? Yes. But keep in mind about what I said about this daily cycle SMT right here. Assets that form the failure swing in stage 1 will likely turtle soup. Stage 2 SMT, or asset 1 will likely form a turtle soup. Yeah, for the failure, yeah. I don't know whoever said that, but whoever made a post about that or anything, it isn't like that 100% of the time. There will be times where an asset creates both failure swings or an asset creates both stop runs. So whoever said that, I don't know where they got that from. So we have the S&P going for the range high, and we have the Dow taking out the range high as well. So would I consider this daily cycle SMT at all anymore? No. So now what would we expect for the NASDAQ? On that small little portion that we have left. Exactly, somebody said it. I don't even have to say it anymore. I really need to give that a name. Instead of just saying catch up. We'll call it that right there, whoever just said it in chat. We'll call it catch up, like the condiment. That's the name for it now. Everybody that hasn't been with the group for the past 3 days, not past 3 days, but the past like 3 live streams, we're gonna be completely lost. We're gonna be saying the word catch up and people are gonna be thinking it's a new concept. When do we know to play ketchup versus SMT? Based on narrative, yes. And the thing is with that is I can't put that into a video. You just have to see it being outlined and being presented. Because if you look at every hindsight chart on whenever there are times that all three assets take out a particular high or low, you're not going to be able to see it in hindsight. You have to see it while it's forming. And yes, it is based on what? Narrative. What's the catch-up same as continuation model? No. But there is something to it that you guys already know. We'll do a quick little check on Forex. So as you can see, the Forex market, if we look at the lower time frame, if it'll load, because for some reason today non-farm payroll has been making my trading view lag our entire time we've been here. But we can see it right here. As we can see on the 4-hour time frame from that portion of price action, which is what we expected for downside delivery on euro and pound. As we can see, futures, index futures, have been primarily bullish all throughout the week, starting on Wednesday. This is not something you would like to see. This is not a coupled market. These markets right now are decoupled. So whenever you have the dollar trading higher, the dollar is correlated to these futures markets. So whenever the dollar is trading higher, in theory, the futures markets should be trading lower, and vice versa. Whenever the dollar is trading lower, the futures markets should be trading higher. But as you can see, that's not always the case, and sometimes the market will decouple, as what you're seeing right now. So whenever you see the markets decouple like this, you should not take intermarket analysis into consideration. So we'll see if we can use this gap right here as a means of support to trade higher, but there is a possibility that it could just run without us. And on non-farm payroll day, precision elements tend to be a little bit thrown off. So don't bet too much on this gap working. But if I had to absolutely pick something to play off of, it would be this right here. Why not use the 1 minute gap? We could, but on a day like this, especially early on, because we're still before, or we just reached that 9 o'clock hour. like I said, on non-farm payroll day, precision elements will be thrown off. So, don't want to try to go down to those lower time frames yet and pick something out. After non-farm payroll release, will precision elements be on track again? Yes, but this entire day, don't expect anything of substance. Don't come into a day like today with high expectations. Is the right thing to do just to slowly try to move intra-week and swing trading like 1 hour to 15 minutes as a minimum time frame. And also we got this precision swing point right here, so I'd like to see this offer a retracement into the gap. But for the person asking about, what you should do swing trading, whether you want to be a scalper, whatever, that's all going to come down and boil down to your personality. Because not everybody's going to be the same. Not everybody's going to have the patience to swing trade or the patience to wait for those higher time frame setups. If you've adapted to the 1 minute time frame and that's all you know, then you're likely a fast-paced person. And you still can yield results on that time frame, but you have to be really, really equipped to do so. In my opinion, swing trading and short-term trading is my favorite, and I believe that's where a lot of you will find the consistency that you're really looking for, because it forces you to sit out and it forces you to wait for high probability moments. You can't just go there every single day on a 1 minute chart and expect something to be there. You have to actually wait for sound logic things to form. But that might not be your personality. You might not be able to wait that long. And like I said, that's fine. You can still build a system around a lower time frame chart, but generally the higher time frame will yield you higher probability results and better results. And yeah, short-term trading is just holding a trade for like 2 to 3 days. Or let's say you get on Tuesday and you get out Friday. That's what short-term trading is. Somebody said, what if we don't take the high on NASDAQ? Then we don't, and I get it wrong. Do you trade options at all? Sometimes. Is it common for indices not to offer a one-shot, one-kill model like this week? Not necessarily, as that model doesn't form commonly. If you're talking in specific to like the monthly and weekly cycle or the weekly or daily cycle, that model you can expect it about 2 times a month. So the actual week doesn't really hold much substance into whether or not it will form. And yes, if the NASDAQ didn't take out this high and then completely traded down lower, that would be considered a weekly cycle S&T. There we go. We have the NASDAQ taking the high, not even offering a retracement. So from here, due to the fact that we've taken the high on all of the assets, early post 9:30, this would be, if I were trading on a day like today, this would be a difficult market to try to engage. So we'll keep note of this low right here. for whenever this next 15-minute candle opens up. This low that I just marked out on the chart and outlined right here is the high of what is going to form with this fair value gap. So now we can move down to these lower time frame charts, but always keep a mental note of where we're sitting at in regards to the higher time frame. Because what is likely to happen from here? Either consolidation or continuation. Very rarely within the same morning session, non-farm payroll delivers. Depending on that side, you'll see a complete reversal. So if Asia and London delivers to downside, NFP may go upside, you mean? No, it doesn't work like that. Just because Asia or London do something, that doesn't mean non-farm payroll is automatically going to deliver a specific way. Like I said before, and I think I've said it about twice in the stream, non-farm payroll can completely just disregard any analysis you might have in mind. And that's why so many traders lose themselves in this event. And if you don't know how to shield yourself from that, then there's a good chance you'll end up in a worse spot than you were before. In your ideal dream market, what would you want to see from here to take an entry? Firstly, I'd want to see us trade below this low, and then see something of substance, and then continuation higher. What about those lows in specific? There we go. Those lows are the high of a fair value gap. I'll take the red box off. When do you think market conditions will be easier to read? Likely next week. Next week will be filled with a lot of volatility. Somebody said, what is your higher time frame view on indices? It seems like this move up on the daily chart happened without any real bullish higher time frame TPDs or SMTs. On Wednesday, Trump had came out and said some stuff, and then later that day, around 3:30 p.m., earnings came out, which affected the market. So that was the reasoning and the catalyst behind that Wednesday expansion that happened in the PM session. And yes, things like that in the market can take place without any explanation. But in regards to this move with non-farm payroll as to why it delivered to the upside, that's just one of those things. Like I said, non-farm payroll can just deliver without any reasoning behind it. And as a trader, traders are natural problem solvers, so you'll naturally try to find a reason for what's going on and the reasoning behind why things happen. But sometimes it's best to, instead of trying to figure out an extremely difficult problem that you know will still likely cause you trouble in the future, instead of trying to figure out that problem, just avoid it altogether. What do I mean by that? I used to teach somebody way before I even mentored. I used to teach somebody one-on-one, and I would show him things and they would work like 85 times out of 100. Those other 15 times where they didn't work, those were the things he would point out, and that's just personality as a trader, problem solver, trying to figure out that perfect thing. He would completely disregard the 85 times that it worked and only focus on the 15 times that it didn't work and put a lot of emphasis on that. But instead of trying to figure out the difficult issues or trying to figure out issues altogether, just avoid them. Just don't worry about it. Focus on the 85 times that it's likely to work and encapsulate on that, instead of trying to get caught up in, low probability conditions. Because there will be a time where high probability conditions come in the future. It's pretty much guaranteed at this point. You all have seen me do it this year many times. So these low probability conditions, instead of trying to figure them out or trying to figure out a perfect system around them, just avoid them altogether. And then once the good conditions roll around, that's when you really encapsulate them. So we have the Dow trading below this low. I normally hear you say this was the morning session move. If it were me, I'd close the charts right now. Isn't this the case? Yes. But this is a little bit different, just because there are some things I need to explain. So, coming up on 9:30, on a day like non-farm payroll, don't expect too much volatility to be brought into the market, because usually 9:30 brings a good move. On a day like non-farm payroll or CPI, don't expect that same amount of volatility to take place, which we might see that coming into today. But a day like today, altogether, I wouldn't even want to trade this day if I were day trading. If I didn't have a position on before non-farm payroll, if I didn't get in the day before or 2 days before, I would completely just disregard this day and wouldn't even worry about it. And that leads back to what I was saying, of instead of trying to solve a difficult problem in trading, you can just avoid it altogether and focus on the easy stuff that you already have figured out. Are we expecting again a tap and fly into this 15-minute fair value gap? Yes. I'd want to see another one of these assets tag into the gap besides the Dow. Do you consider this 1 minute inversion fair value gap of any sign of a reversal or pullback? We've wanted to see this pullback before this 15-minute candle even closed. When you see two 15-minute gaps, do you expect the lower one to be tagged at all? So things like that will come based off of speed and strength. And in a market like this, where a good move has already been made, preferably, if we were to continue higher, preferably I'd only want to see this gap get filled, and we leave this one. If we go drop all the way back down within here, that could cause a bit of concern. But best case scenario, if this morning session were to take off and continue higher, we would trade only into this gap and do the higher run. Let's focus on something else, but we have the NASDAQ tagging into that gap, which would be this low right here. So again, if we drop down to the 15-minute time frame, you see this low is the high of the fair value gap. Would you consider the 6-hour time frame as the best time frame for intra-week analysis? No, but there is a time and a place to use it. Now we have the S&P tagging inside of that gap as well. What are your possible thoughts on how to trade or how to enter a possible trade inside of the fair value gap? So in any normal trading day, which today, like I said, low probability, you don't want to put too much emphasis or bet too much on something because precision elements are off. But in a normal day, you could literally just enter, boom, have your stop somewhere. As long as you're on the strongest asset, have your stop, allocate some room for the gap to breathe, and then target higher. Now, will that be the case for today? I couldn't tell you. And you already know why. But we'll see. We're tapering. We're not betting or putting too much emphasis on both sides or one side of the market. So you wouldn't wait for a lower time frame for your value gap or even a sequential SMT? You absolutely could. If you wanted to get an entry and not have, and like I said, this boils down to your personality. If you're the type of person that absolutely cannot stand seeing trades run without you and you getting it right, just straight up entering is going to be your friend. Now, are you going to have to allow for larger risk, meaning your risk to reward isn't going to be as high? Yes, but do you have to worry about not missing a move or missing a move? No, you don't have to worry about missing a move. So it's going to boil down to you. Are you the type of person that has to wait for lower time frame confirmation and wants that security? Then wait for confirmation. If you don't care about a trade running without you and you sleep better at night knowing you waited for something, then absolutely. But if you're the type of person that will, lose their shit if they see a trade run without them, then I'd recommend just straight up entering on a gap. Some of you are probably thinking, what the hell, that sounds like me. So we have about 30 seconds until non-farm payroll. Not non-farm payroll, forgive me. 9:30 open. So do you see what I was talking about with 9:30 not really offering that big of volatility? See, if you see this 1 minute candle right here, you see how it's just went on both sides and kind of closed small body. There we go. So we have the Dow running above this high. So this could be a concern for a microcycle SMT. Now, preferably, I'd like to see all of the assets try to run for this high, but don't bet or put too much emphasis on this. Just keep a mental note of it. Somebody help him out in chat. Somebody said why. Said it about 4 or 5 times already. Or no clear way of trying to get in on the lower time frame here. If we were to trade higher, that's a telltale sign right there of low probability conditions. As well as we have the Dow now moving polar opposite with the S&P and the Nasdaq. how common is a 2 a.m. TBD within a month, would you say? You can probably expect it about 3 to 5 times a month. A really good one. NQ tapping the lower 15-minute gap. NQ is the weakest right now. S&P is still holding out. And the Dow still holding retrospect to its gap. So now do you see what I mean about precision elements being thrown off? Because even somebody well versed like me, markets aren't delivering promptly. It's how they usually are. Because in the other live streams, I could be like, okay, it's going to go here, and then it's likely to do this, and then we're going to do this. On a day like today, you don't want to try to force something like that. Because this is not easy price action to maneuver within. On the hourly, would you consider this hidden sequential SMT, the 9 a.m. bar, might close a precision swing point? Maybe. But right now, like I said, we're not betting too much on any concept holding. Because in a low probability environment, no matter what concept might be showing itself, there's a good chance it still will fail. So even though the market, in my opinion, is still showing a willingness to try to run for this high, do you see how sloppy this delivery is? Even within here, it's very back and forth, and even the S&P, you see it tagging all the way down into this gap, while the NASDAQ is only tagging into this gap, and while the Dow doesn't even have a fair value gap on it at all. We have this very sloppy delivery. This is what low probability looks like. And on a day like today, like I said, this is where you'll find price action like this. And whenever you see things like this, and soon, given enough time, you'll be able to anticipate it. These are the days where you don't want to push too hard or even try to do anything. Because, like, for example, the person that sent it in the chat, entering like somewhere around here. Even if you entered right here and it offered that rundown, look, as soon as it offered this short rundown, came right back. If you had your stop at break even, boom, you're getting hit out of break even. And it very well could continue lower. How come you don't post your classes on WAP? Everything is posted into the WAP. Alright, so we have somebody that was streaming that's heading out right now. So, I'm not sure if we'll run into a small road bump. With people being able to watch. Can you show the measure of strength with the wicks again? On a day like today, it's going to be difficult because the rules really don't apply. But I can try to find an example like this. So we take this wick right here, and the same wick right here. See how the S&P barely tagged into this wick, while the NASDAQ tagged further to the midpoint and a little bit above. And we can see of how the S&P right now, and this could change, the S&P right now is stronger for downside, trading below this low, while the NASDAQ is failing to trade below this low, showing that it's weaker to the downside. Highlight this right here, but like I said, don't expect it to be high probability. This very well could fail. We have a microcycle sequential SMT and a 1 minute gap. If all assets go above previous high or low cycle in creativity, how can we recognize if it is a continuation or reversal? If the higher time frame draw on liquidity has yet to be met, it is likely to be a continuation. If the draw on liquidity, and look at that volatility coming in. If the draw on liquidity has been met to the higher time frame, then you could see a reversal. Here we go. We have the NASDAQ trading below this low as well. And this, what? Failed. He got it wrong. Yes. Like I said, on a day like today, don't expect things to be high probability. See, ever since 9:30. See how the delivery's just been back and forth and choppy? I know, he got it wrong. I'm gonna do it wrong sometimes. It is what it is. The close on that 1 hour hidden weekly cycle sequential SMT. So, what good is that going to do you in price action like this? As you can see, without any reasoning, under this low, we're already returned back within the range. And no, this is not a hidden SMT. This is not a hidden SMT, for the people wondering. This, if it were an SMT with this close right here, this would be a hidden SMT. Somebody asks, well, when is price high probability? All those other days that I went live and did the tape readings, those were high probability days. Does non-farm payroll generally have this kind of market condition after news time? Yes. somebody that set the thing for the hidden SMT with the Dow, no, that would not be a hidden SMT. Isn't this body Twick SMT? Do you use that? No, I don't believe in that. I mean, everything in price is a crack and correlation. You can find new cracks and correlations all the time. But will it yield you consistent and repeatable results, and will you be able to foresee it coming in the future? That's the real question. If the answer is no, then you don't want to put too much focus on it. Today's price action started with a weekly cycle sequential SMT with a 4-hour TBD and 1-hour TBD and a new week opening gap with no sign it's reversed. Can you please tell me why? Because non-farm payroll has the characteristic of just boom, running one side of the market, completely disregarding any analysis you might have in mind. And that's why I tell you guys to stay away from this day. Use SMT fill? Yes. Today's entire lesson was just focusing on low probability price action. This is the market you want to avoid, because you saw me, even somebody that's been with these concepts for a very good amount of time now at this point. You saw me outline things and they failed. And that is the characteristic of what? Non-farm payroll. Because let's go through it together. Of right at 9:30. Somebody that isn't well versed and doesn't know, somebody that's just uninformed. Let's follow their thought process together through price action like this. Somebody that's new, doesn't really know what they're doing. They see the initial run up higher in the morning, right here, right at 9:30, and they're thinking, oh, I'm gonna long. So they long around here with normal risk, and then boom, immediately stopped out. So now they're like, okay, let me flip it. Let me add more on and then try to short right here. So let's say they get in the short around here. Okay, it gives them a nice run down. So now at this point, they're conflicted. They're like, okay, I could either close this trade right here and get out at break even. But since the market hurt me up here, I'm going to hold on to it. I'm getting my money back and I'm coming with interest. And then it immediately pops back up, bam. Now they're in drawdown again. And then it trades higher. And then if they had a stop loss set right here, then they're getting stopped out again and they're in even more drawdown. So now they're already pissed off. And they don't know what to do or what to think. So now the markets consolidate for a little bit. Let's say this run up right here, this small run up. They say, oh, there was this 1 minute fair value gap right here. So I'm going to long again right here and then target this high or this high. Then enter a trade, boom, immediately stopped out again. So now they're really pissed off. Now they're completely derailed. And then they take a short right here. And then they follow that same exact, are we good? Can you guys hear me? So back to the story. So then they see this short downside movement again. They decided to short inside of this fair value gap, or long within this fair value gap, like the one I highlighted. They took a position. Doesn't matter. If you would have went both ways here, guess what? Still would not have worked. And we can see prices delivering right now to this high without any reason whatsoever. But anyways, back to the story. So no matter what position they entered here, whether they were long or short, guess what? They still took another hit. So now at this point, they're very livid. Their account's about 50% in drawdown. They don't care anymore. They're like, you know what? I'm putting everything on the line. And then they bet one final position right here. And regardless whether you were long or short, due to the fact that your entry wasn't precise, that's it. You're done. Account gone. So somebody that's, doesn't really know how to handle themselves or isn't capable of trading in these conditions, that's something that's going to happen. And some of you might have experienced that today. But in price action like this, you can see this isn't something you want to try to push hard. Some of you are probably thinking, how the hell did you know I just went through that? I went through the same thing. I know how it is. But are you going to grow from it? Or are you going to stay the same? That's the real question. We should give that a title. The Story of a New Trader Against Non-Farm Payroll. I know a guru who does that live. Does his name start with a D? I don't get how people even get a platform like that in the first place. It's crazy. What other news events hold this characteristic? Generally, the big news drivers will hold this characteristic. But these news drivers are absolutely terrible for intraday trading or scalping. Horrible news events to try to scalp or trade in the morning session. But they're absolutely amazing trades if you're on the right side of the market and you get in the day before. Like, imagine if you would have got in, let's say, right here, Thursday, right as the daily candle opened on Thursday, and you somehow got in right here. Look at the volatility that it offers, that initial push. So they're amazing for short-term trading or swing trading. Absolutely horrible for scalping, day trading. Another asset must respect an FEG before that high. We don't have any fair value gap before that failure swing. What should we do for that? Meaning low probability for failure swing? I'm not sure what you mean by that. And as you can see, here we have the NASDAQ popping up above that high that we've been eyeing for the past hour. So this is an amazing study and an amazing reading on why you should avoid these days. So even though now the NASDAQ has finally traded above this high, look at all of the in-between that happened. Look at this sloppy delivery. This is why you want to avoid these days. And there was no cracking correlation down here. There was no rhyme or reason for why price should have turned down here. It just did it. And you're seeing that now. And another example about what did I say about 930 with the volatility. On a non-farm payroll day, see this huge move that we've already had? We see how 930 opens up and it's just back and forth, back and forth, back and forth. Is one asset tagging 50% of fair value gap and the other half staying at the top 50% also considered a sequential SMT fill? Yes. Yes, I think we're about to wrap things up here. There's not much really to cover. The purpose of this live stream was to showcase you low probability conditions and why you stay out of the market on days like today. So with that being said, hopefully you all found this one insightful. I'll speak with you all again soon. With that being said, good luck and good trading.